In this video, I'm going to give you the exact framework that I've used to completely achieve extreme confidence in trading and to never doubt myself and to never doubt the concepts that I am using. But before we get started, for those of you who do not know me, my name is Stoyan Alin and I have been predicting and documenting the Nasdaq since 2023 and I plan on doing it for as many years as possible until I cannot reach or mention for the years in the beginning anymore. The reason why I make these videos is because I document my progress over a very long time period. I share everything I learn through mistakes, so you do not have to do them. I get you to avoid the mass mindset, which eventually leads to failure, because I was once in that category and I've got deep scars from it. I mean, I've healed them right now, but I've had deep scars that were so hard to get out of my system, of the way that I was operating. So I don't want you to go there. I just want you to learn from my mistakes. I want you to learn without getting the scar so you can get ahead. And I get you to understand the right way of doing this. And this might sound uncomfortable. And this is the reality, because making money or progressing in life or having everything that everybody wants, because everybody wants money, everybody wants to be good in trading. Having something that everybody wants to be good at is going to be uncomfortable. And I know it sounds crazy. This is the thing that bothers me. And this is really why I make these videos, because that bothers me, that the common sense right now is everything has to be easy and everything has to be fast. When in reality, I truthfully believe that nothing should be fast and nothing should be easy, and nothing is really easy. It is just sold that way. I'm going to state this right here. Even though I might lose some of my potential customers, I just give you everything for free. And when I said customers, I want you to understand that I've had, for the past 2 months, I've had a one-on-one mentorship open. So I've had open spots for my one-on-one mentorship. And in the past, I've mentored 65 people. But I currently have them closed because I'm overwhelmed by the complete demand these people require from me. So I have these people that I currently mentor on a one-on-one basis. So my mentorship one-on-one is currently closed, but we're going to have a Discord channel coming in. But let's just get that out of the equation and let's just get into the video. And I'm going to state this before we start the video, because this video might not be for you. You might trade retail concepts, you might trade smart money concepts. This video is for you only if you trade ICT concepts. You sometimes are doing good and sometimes not. So you're not consistent really. You're just getting flash in the pan results. You wonder if trading is going to work for you or not, because you're getting those flash in the pan results and you can already see a spiral coming down. You don't get consistent results and you do not know when the market will do what you want or not. I have solved all of these problems through the framework and through the understanding, really, which I'm going to give you inside of this video. So stay until the end for real chart examples. So the first thing that I want to tell you is that the most important enemy that you are going to face inside of this industry and inside of making money, really, if you're a business oriented person, if you're an entrepreneur, if you're more inclined to be an entrepreneur more than a trader, even though I don't believe that because you're watching a trading video, I want you to understand, and I'm not going to make these videos shorter. I don't care who watches this or not. I'm just going to make them like I want them. I'm not going to shorten my video. I'm just going to get this out of the equation. I'm not going to shorten my videos. This is all one take. I literally speak from my own experience. I never regurgitate anything. Getting that to the side, I want you to understand that the most important enemy that you have to get over is you. You absolutely have to take control of everything, which means that you have to be accountable for your mistakes. And you have to understand that being responsible saying that you are the one that failed and not the concepts is going to give you power to look into your adversities. What is the current barrier that holds me back? Because if you are not progressing based on data, do you have the data, by the way? Data meaning that you are constantly journaling your progress. Do you see progress or do you see regression? Or do you even journal in itself? I might have just gave you one adversity. So whose fault, instead of that example, whose fault was it? It was your fault if you didn't journal. It was your fault if you did not understand that you were regressing and not progressing based on data. Your fault. So take control of everything, which means being accountable for your mistakes. Understanding that you are the one that does this wrong. And I'm going to remind you, I speak only from personal experience. I never regurgitate anything that I did not apply to my trading. I'm just going to say this right now because these videos, they are aimed for my grandkids. I'm not even going to say kids. They are aimed at my grandkids to see. I don't care who watches this. I know they're gonna do it. The next thing that I want to say, which absolutely correlates to my narrative, is that your vision is too narrow. So most likely you rush to have it done now, which is most of the trading problems that most people have. And this is the main problem, really. Because if you rush because your vision is too narrow, if you want to have it done right now and you do not have a 10-year or a 5-year or even 2-year plan to say, okay, I'm going to do this every singular day of my life. I'm going to do this for the next 2 years. If you do not have that, then everything is going to be based. Every singular action you're going to take is going to be based on next, and daily. Everything. So what you will do is, and you're not even aware of this because you're such in a rush that you cannot be aware of your thoughts, you cannot be aware of your feelings, you cannot be aware of anything. What you will observe is that you make every singular decision on rushing and you will skip over understanding your adversities. And what will happen is, this is your path. You're starting here and you're constantly, quote unquote, elevating, right? You're progressing into your development. You're progressing, but you do not pay attention to the mistakes that happen inside of this progression. So what will happen is you will stagnate into a level because you will accumulate a lot of mistakes, and all of these mistakes, if they are not solved at the correct time, they're going to accumulate and you are not going to know which one to attack. What this will do to your progress is you will be at your level, you will not know which problem to attack, and you will stagnate at this level, and you're going to lose even more time because you have to now go down and look at every singular step that you've took. So basically you just wasted time. What you have to do right now is you have to lift your vision. Exactly as I told before. 2 years. Because if you give yourself 2 years, like, okay. So I'm going to take this absolutely seriously, as at the end of the 2 years, I'm going to be my best version. And once you've done that, you will commit. You will commit, I will do this no matter what happens. There is no absolute excuse because this is written. I will do this task, and this task for the next 2 years. Perhaps I might iterate in the duration of the task. I might iterate in the task in itself, how I do it or whatever. But the basis still stays the same. There is no excuse. So who did you fix really? You fixed yourself and your vision, and by extension, you fixed your trading. And what you might realize after you do all of this, from what I've did, of course, and I'm going to tell you what I've did, is I realized that most of my time should be spent inside of my developing process, which is studying, journaling, and tape reading. I realized that my point of view was unrealistic and adopted a realistic approach, because right now you're not in a rush to get somewhere. You have this big 5-year plan or 10-year plan or whatever, and this might sound weird coming from a 20-year-old, but perhaps, and I'm not going to consider myself smart, but perhaps I've had the perspicacity to understand that these 40-year-olds or 50-year-olds which have experience, which perhaps might be ICD, this is whom I get the wisdom from. If they have that wisdom and they share it with me and I do not listen to it, why would I want to go through the pain that they did? And I just put myself into their shoes and I understand why they say the things that they say. So I'm skipping over all of these mistakes that I can do in my 20s and I jump right into my 50s while still being 20. This is my perspective and I share absolutely everything with you. No filters. So I realized my POV was absolutely unrealistic and I adopted a realistic approach, and I only committed to thinking this way and being independent, meaning I don't care about nobody in this industry. And when I say nobody, I don't care about nobody. And I didn't even look and I didn't even study a lot of ICD anymore, because I've studied for a long time doing the absolutely correct thing. And then I understood that you cannot be a student forever. You also have to put that knowledge into action. So what I did, I studied ICT, then I took all of the knowledge and then I applied it into the real world. And you see that inside of my executions. And once I fixed myself, then I understood, and by the way, this video is uncut. I understood that most of my time will be spent in analyzing and studying the higher time frame, as the higher time frame is king and as the higher time frame dictates what the market will do on a lower time frame, which is most of the work that most people do not want to do. And if you're going in and looking at YouTube, you're going to see easy 1, 2, 3 strategy, no daily bias. I wonder why. I wonder why 90% of people fail. I wonder why. This is why. I understood the flaws that I had, and I perhaps still have, and I embraced adversities as stepping stones, which means that if I continuously do not progress, and I see myself doing this over and over and over again, then what I will do is I will stop and I will decide that I'm going to attack this adversity. I'm going to attack it because I know that at the other side of the adversity, there is going to be the next step. There is going to be my progression. That is how I progress, literally. I take this adversity, I understand and I see this as a barrier that does not let me progress. I analyze why it happens. I analyze if it's me, and mostly it's me, the way I see the market or something that I was not aware of. I get aware of it, I see progress, I continue. The process in itself is here, adversity. Boom, you lift yourself, you understand the adversity, then you're at the next level, another adversity. The process is never like this. I want you to understand this. And I also want you to understand that in order to see these adversities, you have to absolutely be perspicacious. You have to be aware of them existing. So if you do not journal, if you do not do all of these things, you already see and you already understand that you are fucked. And I don't care about language anymore. I understood that I will never achieve 100% accuracy. So I adopted a high probability trading mindset. A high probability trading mindset might be less frequent and might seem like, oh, am I procrastinating? Am I lazy? Am I not looking at, and this is an adversity that I've had for a lot of time where the market was consolidating and I thought that I've had to do something. For example, if you're watching this in 2024, in February to March 2024, we had a big consolidation inside of the daily chart. So what I did, I beautifully just never did anything for a straight month. I never traded because I understand that my perspective as a trader is yearly. I waited for the market to get into better conditions, as I understand that my priority as a high probability trading is one-sided trading, and I stopped. But I was still getting the doubts. Do I have to do something? What do I have to do? Do I have to go in and trade intraday volatility? Do I give up on my model? I still had those. But I want you to understand that once those conditions ended, I was absolutely paid in full when it comes to the discipline that I've had. It was rewarded, and not only monetary gain, in mental capital, which is mainly the currency that you use as a trader. So I understood that, and I solely focused on high probability trading. I solely focused on my own mental health. I focused on only trading the highest degree of probability in terms of market conditions. And this, my friends, is the best way of trading. I completely guarantee it. The roots of my high probability trading. The first thing that I do, and this is getting technical, so I'm not going to talk about myself. Let's say I fix myself in this instance, and I genuinely fix myself. But let's just say you or me, because I'm talking about myself right now, I fix myself. What next? The roots of my high probability trading. And I've spent a lot of months trying to understand this. And I'm going to give this away for free because I don't give a shit. How do I achieve all of these results that you see on social media, which are absolutely meaningless currently if I'm looking at the higher time frame? It is absolutely beautiful. It's very abundant, I promise. What I have is the weekly direction. Is it higher? Is it lower? That's it. If the market is neither going to be one-sided in terms of higher or lower on a weekly chart, what do you think I do? I never do anything. If I cannot say either the market is 100%, 80 to 90% higher, I can see that it will go higher, and I only want to see that direction. I only want to look at that direction. If I do not see that, then I will do nothing. But if the market is going to go higher or lower, 90 to 80%, then this is what I will focus on. Only the direction. I don't care about nothing else currently. I don't care about details. Is it higher or is it lower? This is the conceptual idea. Then I understand that my weekly direction is going to be to the upside. So then I will decide which days I'm going to trade based on high impact news drivers plus accumulation, manipulation, and distribution. So we are all familiar with the concept of power of three, or accumulation, manipulation, distribution, where the market is accumulating, then we manipulate all of these retail traders, and then we distribute our profits as smart money traders, and then we go into the closing. But eventually what I want you to focus on is to understand that if we have a higher direction, higher, 90%, or it is a one word, I'm only looking higher, one direction. If I only have that direction, then I have to understand that based on the accumulation, manipulation, and distribution, based on the power of three, I will have to see some kind of manipulation. I want to see the market go down first. How does the market go down, and how do we understand when the market is going to go down and when to trade that distribution? We are going to trade that distribution after the manipulation has been done. Of course. When will the manipulation be done? How do I know this? We know as ICT traders and as smart money traders, and I will absolutely zero debate this. I will never debate this. The market is driven algorithmically. And if the market is driven algorithmically and the market's sole purpose is to capitalize on retail traders, then the market will use these high impact news driver events to manipulate these people and to take their stop losses, so we as smart money can indeed capitalize on their poor awareness of how the market moves. If we indeed do that, I'm going to give you an example. Then if we see CPI, let's just say we have CPI on Wednesday, what I will anticipate is I will never trade Monday, Tuesday, and Wednesday, because I anticipate Monday, Tuesday, and Wednesday to be some form of accumulation and manipulation for the CPA traders to be induced in the wrong direction. So all of these retail traders that are completely emotional and they trade based solely on emotion, based on seeing the market volatility and their poor concepts, they're going to trade in that direction, in the wrong direction. So this is what CPI will do for the entirety of the week. So then after CPI, what are we going to see? If your perspective is correct, we're going to see distribution. We're going to see our real direction. So I will only focus on Wednesday, Thursday, and perhaps only the AM session of Friday. And by the way, just another tip, I want you to also, if you want to, I want you to solely focus on one session and solely focus on one in general. Just solely focus on one, because the trouble with this current generation is you have absolutely no attention span. I'm not going to get deep into that. I just want you to understand this is what I do. I focus solely on one session. So, coming back to our idea, we have the CPA week. We know that Monday, Tuesday, and Wednesday are going to be the manipulation for the week. What days am I going to trade in? Wednesday after CPI, Thursday and Friday. Friday AM. Let's just say, for instance, because the PM can create the high of the week and eventually can retrace back into the weekly range. What days am I going to trade in? Wednesday, Thursday, and Friday. What's my direction? Higher. So what am I going to look for inside of an intraday? You might ask. Intraday model, which we are getting very and highly specific right here, you are going to have your intraday model based on set daily bias, which is derived from the weekly chart. So once you have the days in which you're going to trade, once you have your bias and narrative for the weekly chart, what you will do based on your own 15-minute chart or intraday model, you're going to wait for that model to occur inside of the 15-minute chart, and you're going to look only inside of that direction. That is the key. I'm never going to see, when I have my bias to the upside and I've saw all of my signatures, I am telling you, I will never, ever, ever see or worry about the market to, let's just say, for instance, I have a bullish bias. I will never worry about the market to, go up into this SIBI and then go lower. I will never worry about that. I will already anticipate that the market will go above my level of buy side. So this SIBI, and I'm going to show an example, of course, and I know that you cannot see what I'm actually describing, but it's funny. I will understand that this SIBI, which is here, and this liquidity pool, which is here, which is a high probability target based on my work, all of my work being done on a weekly and a daily, if I understand that this is very high probability, then this will become an inversion fair value gap. Boom. You now understand why we trade the way we trade. Unfortunately, I have more things that I use which I cannot give to you because I'm not 100% sure, because they're my concepts based on the A-City concepts or my studying. So I cannot give it to you because I might change my opinion in the future, and I might think that is not relevant, and you might not change the way you might not change with me. And I don't want you to have any problems with your trading. Just stick to what you know right now and just apply this thing, and I promise, I completely guarantee that you're going to be better 100%. And I'm going to quickly give you an example of everything that I've talked about, quickly, just going through this. This is the chart of May 7th, 2024. You can actually see that the screenshot was taken at 23:09 UTC minus 4. What you're seeing here is the exact thing that I talked about. We can see that I already have in this weekly chart of the E-mini Nasdaq futures, the June contract. What I have inside of this chart is my one-sided bias to the upside, which was built on a monthly and a 3-month chart. And unfortunately, I cannot give you the time-related concept, but it is based on the same thing. Bias to the upside, and then accumulation, manipulation, and distribution on the 3-month chart and on the 1-month chart, and even on the yearly chart. I'm telling you, bro, higher time frame is king. Based on understanding that we were already going to the upside, and I've had these targets since January, I want you to go back after this video is done and look at my January analysis. I've predicted the whole entire year until now. This is June 2024. I predicted the whole 6 months, and I still believe that in the next 6 months we're going to achieve the other targets. But basically, without fluff, like somebody called in my last video, which is absolutely funny because they have no attention span to actually stick with these videos. What are we going to look at here? If we have a one-sided bias, if you have a one-sided narrative, is this is important. If I understand that we're trading here, how will I read the price? How will I interpret the price on a weekly chart? Let's just say we're trading here. And I've had students on a one-on-one basis, and I have proof, video proof of me saying in February that this was about to happen. That this run on these sell stops, it was never a run of market structure shift. It was just a run for the market to continue higher, so we can take all of these retail stops that were put here, so the market will clear out these people, so we can move on further. So what I saw this low being taken as, I only saw this as a means of sell side being taken. I never saw this low, never saw this low as a means of market structure shift. So when we were trading inside of this candlestick, looking at this fair value gap, knowing that when the market goes back into a fair value gap, it makes it efficient only, knowing that I anticipate, listen to this, I anticipate the market to go into the 20,000. We're currently trading at 18,000. 20,000 in the next 2 months or 3 months. What I saw this fair value gap as when we were trading inside of this candlestick, I already knew that this was about to be made a balanced price range. The reason why is because when the market goes back into a fair value gap, it makes it efficient, but for the market to create this as a means of balanced price range, so we never have to go back into this low after the market leaves it, is indeed the condition for the market to leave it. So we left this fair value gap, and instantly in the first week of May, this is the first week of May, or the second week of May rather. This is the second week of May. I already knew, look at this. I already anticipated. I never saw this inversion fair value gap or the SIBI as a means of, the market is going to go below this low. Never saw it this way. I saw this as, okay, the market has to close above it. As this period, I want it to fail. The market has to close above it and then use it as a means of support. It doesn't have to use it as a means of support. I just want to see it close above it so I can understand that I'm on the right way. So I can understand that this PDRA failed, and my bullish PDRAs are going to be absolutely supporting price higher. So this is an analysis before the weekly chart has opened. This analysis before the monthly chart of June has even opened. I had my targets even from January, bro. I'm telling you. From January, I've had my targets to 20,000. So this is what I was still targeting. So this bearish order block, what will I see this bearish order block as? I will already see it, and you can already see within my annotations that this will become an inversion. And I already anticipate this liquidity pool to be taken. So, very easy. What will my weekly bias be? To the upside. Okay, let's just say this is CPI week. If this is my weekly bias, to the upside, and we have a CPI week in which CPI is on Wednesday or FOMC is on Wednesday, I will anticipate the market to create the manipulation of the week on Monday, Tuesday, and Wednesday, and I'm only going to trade Wednesday, Thursday, and Friday. Wednesday after the FOMC or the CPI or whatever, and I'm just trading stressless. And if I lose, then what? Then you fucking lose. But the trickery of being a high probability trader, and I've wrestled with this, but the trickery of being a high probability trader is not to actually not lose, but rather to limit the amount of losses that you get. So what I want you to understand is that you have to focus more on your risk. Focus more on your risk than your actual profit. And you will see that by risking less, you will gain more. And my friends, this is the chart of June 28th, 2024, 21.27 UTC minus 4, in which we absolutely did exactly the same thing that I was anticipating, exactly in the manner that I was anticipating. We have the 20,730.4 level, and I'm briefly going to go through this, and I'm going to make you understand how I do this. So what you can see here is the month of April making a swing low. We came back to this fair value gap. We made it efficient, and then we left it, which means that this becomes a balanced price range. And if the market has done a balanced price range, then it means that we never have to go into that level before we achieve a target. So this would be my target, this level of buy side, which I've showed you previous. Then what I understood that was that, okay, if we're going to go here, this CB has to fail. So we indeed wanted to see the market close above it. It closed above it. This order block, which will become a breaker, has to become an inversion level, which is basically what a breaker is, but rather instead of this formation. We closed above the breaker. So what this means by the characteristics of a breaker is that we're only going to want to see the upper part, the upper 50% to be hit with. When we're talking about breakers, we do not want to see the market go back into the lower half. This is one breaker characteristic. We can see the market closing above the breaker, which is a sign of strength, that the market is still indeed strong. And what I'm doing here is I have my weekly bias and my weekly narrative to the upside, and my higher time frame 3-month bias to the upside. So I only see these signatures to the upside, pardon me, and this as a fair value gap. What I anticipated was that the market would create this as a swing low. We will go back to the 75% as a sign of strength, and then we are going to continue to the upside with speed as I've been given the signs of strength that I've been given. And I still believe that this target is going to be hit inside of July, August, and September, so in the next quarter. And basically this was the video, guys. One more thing that I want you to do is I want you to go into the free channel, which is going to be inside of the description if you want to. I don't care if you do not do it. I genuinely don't care. But that is a place where I share valuable insights on the market via text. I directly share lessons with you as I learn them, and I discuss these videos and I add more conclusions via text. This was STO. I hope you guys enjoyed this video. See you in the next one. Peace.